Hey everyone, welcome. We're going to give it about a minute for all of our attendees to start cycling in. If you will do me a favor and type where you are joining us from in the chat so we know that you can hear us and we're not just talking to ourselves. Okay, great. People are typing in. Wonderful. So my name is Valerie Saunders. I'm with the National Association of Mortgage Brokers. We are very excited today to have part one of a three-part series with Christine Beckwith and 2020 Vision for Success, which is a partner of NAMB's. Just to do a little bit of housekeeping before I turn it over to Christine, this session is being recorded. Approximately 24 hours after the end of today's session, you will receive an email directly from Zoom with a link to access the recording. When you signed up for today's session, you also signed up for the other two. So don't worry about having to re-register. You will automatically get information as those are scheduled. But without further ado, I'm going to turn it over to Christine Beckwith.
Awesome. Thank you so much, Valerie. And hello, everybody out there. Thanks for taking your time today to join me. I'm very excited to be bringing this three-part series to NAM. We are calling this the Broker Journey series. And I'm going to be talking specifically today about prospecting excellence. But before I get into the lesson, I kind of want to explain, why did I pick prospecting as the first part of the three-part series for brokers? First and foremost, if you don't know me, this is my 37th year in the industry. I know us old dogs always want to brag about the years we've spent in the industry. 32 years of that I spent in direct management and within originations of the mortgage industry. I started at 18 as a loan officer assistant to a female originator in a credit union in Massachusetts, and I grew into my own originations in Massachusetts and became an originating branch manager, later a district manager over New England, and then eventually a regional vice president over the Chicago, Atlanta, Denver, and Vegas markets, and eventually a national senior vice president of sales. And at that time, I worked for H&R Block Mortgage, which was the sister company to Option One. Some of you might remember those days. I grew for 12 years with that company. My loan officer national pool was 1,250 strong. I had 210 branch managers. I was on the executive team that made the decision to shut the national company down in '07, right before the implosion, and save shareholder price on Wall Street for the main firm. And I would take 50 loan officers from the Boston market and take safe haven in a mortgage boutique shop in Boston and very quickly get picked up by Joe Penabianco, who was growing at the time Village Home Capital and Investments, later to be known as Annie Mac Home Mortgage. I spent 12 years with Joe. Um, my role was national director of sales and real estate, and I spent my 12 years helping hire, recruit over 70 branches worth of loan officers nationwide. And in 2018, I set down my management hat and went on to do my dream job, which was to consult and coach and build a coaching firm that would be another addition to the wonderful coaches that are out there for our industry, many of whom I have done their programs with, like Cara White and Rick Ruby and Tim Brahim and so many, Cindy Ertman, and so on. And so today, I have a wonderful operation that serves all channels. We work in the banking industry for the MBA. So retail, we work in the broker community for the trade orgs and all the brokers at large. And we do everything in between. Our forte is in helping people get formidable business skills and high performance sales skills. In at being asked to do a series for NAM, I was really excited. Right now, our national presence is about 55% broker, 45% retail loan officer, and sales manager. And I've been a part of the broker community for the better part of 8 years now. I've loved watching and participating with the growth of independent brokers, both small and large. I've helped a lot of brokers that are starting their brokerages from the very, one-person shops all the way today to being the consultant and coach overseeing some of the largest brokerages that you know in the country. And so, why did I pick prospecting again as the first topic that I want to kind of unveil? Well, I'm going to bring it to kind of a market connection. And I'm going to let you know that I know that it's been elusive the last 3 years. I was very much in the trenches with the brokers in the third quarter of 2021 when the rates first took a hike, and watched those pipelines drying up and everybody trying to pivot into a higher interest rate. And kind of get used to it. We spent a long time looking in the rearview mirror of better interest rates and hoping they were going to return. It was well into the second quarter of 2022 when we began to recognize that this market was kind of here to stay. And as the months rolled on, it became very obvious that we needed to fish a little differently than we had been. And so, one of the first lessons that I always like to start with in educating is an economic one, and that is kind of just understanding where your well is. So, I'm going to go ahead and advance my screen. And Valerie, if you can just shake your head, yes, that it did move to this little bubble of five bubbles, um,
Yes.
with awesome. With the center being objectives. And these are the things I'm going to be talking about today. Targeted sales, top of mind selling, operating from a business plan, having a referral mindset, and your execution. So I'm going to put up this next graphic, and really have you kind of, sit back and understand that in finding the well, we have to sell with a GPS towards what the consumer needs, wants, desires. We have obviously objections that are given to us in any market. Even when we're in lower interest rate markets, a lot of times we're competing heavily with our peers on interest rate. Calls start from an interest rate perspective. And so this market's interesting because over the last 3 years, it has seemingly been very difficult to convince consumers to take a higher interest rate. Obviously, intelligence from homeownership is focused a lot of times in finance on rate and cost when they're doing a mortgage. What is my interest rate going to be? What are the costs for doing this mortgage going to be? And we are the people that are funding that. And for our ability to overcome fiscal objections to the market, we have to have an ear to the ground and be in tune with what is happening, economically speaking. And so, one of the things that I am constantly doing is digesting a ton of economic news and reading a ton of economic news, not only because I'm the CEO of 2020 Vision and my 24 coaches need to have this information, which I am relaying weekly, but because our entire national client base gets on a national call on Tuesdays and we relay that economic news as well. And so, where we tie back to the market today, not to go through what we've been through in the last 3 years, but knowing that the palette for the consumer has been one where they have not wanted to raise their interest rate. They have not, seen that as a wise thing to do. In fact, they may think it's a dumb thing to do. We want to step back and give you a little bit of facts. Finding the well today in finding business. And we love refi business, right? Because it's immediate and it isn't the waiting game that we have with purchase business. And while we teach on both of these things, both purchase and referral network building with realtors, I'm going to focus a little bit right now on catching the fast fish. And so we tie the marketing that loan originators do today into having a voice directly to the person that you're trying to speak through the lens of your marketing. Many of you have corporate marketing that you're using, or company marketing, I should say, and many of you are creating your own marketing. Some of you are using social media. Some of you are using different means to draw the fish to the net, so to speak. And so it becomes really important to understand two really paramount facts about the well today. Number one, the debt position of all the people that we refied 3 years ago has changed dramatically in 36 months. The other thing, for the worse, for much higher debt. The other thing that you want to understand is that the average length of a mortgage typically over the last 40-year average is 7 years. And in the last 10 years, it's more like 4 years. What does that mean? It means the person holding a mortgage or a note on their home typically is either refinancing and some of that's selling their home in this rich, high equity position that and high price position that the houses have been in the last decade. And so if we understand that someone's going to hold their note typically that long, what's happening during the duration of people holding their notes in that time frame is their fiscal position is changing. Their personal household financial position is changing. There's only two or three things that create a windfall of income typically in a household. Those things can be things like selling a house. You can have a windfall of money. You might put it all back into buying a new house, but that's a windfall for a family and a homeowner. Another way is doing a cash out refinance where they cure their debt and they grab cash equity and they suddenly have more reserves than they've had. And we know that tax refund time is another third, much smaller, but is a windfall time for home ownership. And so when we think about that and we realize that most of the homeowners are sitting on interest rates that were lower, they want to keep these low interest rates. They're remembering how their payment went down when they refied 3 or 4 years ago. They are, however, having debt around them that has risen, both on credit cards, loans that they've taken out while keeping their mortgages intact at those lower interest rates. So their overall financial picture has ballooned. While this has been happening, their cash has been depleting. We know as another economic fact in 2025 that the cash reserves for the average homeowner is depleted. And so they've been using this money so because they're not moving their mortgages and they don't have that windfall of taking equity out to pay off the higher credit cards. They're adding principal to their minimum payments and they're trying to kind of dig themselves out of the hole that they're in. They're using cash for other things. So when we look at that pain point, it's at such a higher threshold, right? That our lead to marketing cannot be what it was for the previous 4 to 5 years leading up to 2021 in the fall. It was easy to take the phone call that was incoming. It was the rage that everybody was getting those low rates. It was on the evening news. And the news, by the way, has not done us a lot of good, not the television news stations. There's been a lot of inept reporting. We have to translate what is given in the news sometimes to the homeowner. They will hear, and I know you guys often have to overcome this objection. Often they'll hear that, rates are down and it's not the housing rate, it's, the federal rate. And it isn't the 10-year treasury bill that affects the interest rate. And so it's so important that you be the expert, that you believe that you're the expert, that you have this economic prowess, that you understand you are the person that can help the person get over their own objections, their own hurdles to where they're going to find that well of cash and a better financial position. If rates were to drop tomorrow dramatically, many of them are in a higher risk position than they were 3 or 4 years ago. And they're not even going to be able to seize the lowest possible interest rate because they're going to look different on paper, right? Their cash reserves are depleted, their debt to income ratios are higher. So it is so important that you are marketing with a clear and precise plan in and around the pain. So your marketing should sound something like, if you have a low interest rate and are afraid to raise that mortgage, go right to the point of their objection. Put it in your marketing. If you have a low interest rate and are afraid to raise your mortgage interest rate, but have high debt and low cash reserves, or one or the other, please call me for a free, no pressure financial analysis. And I've seen marketing that even said, if you feel silly, if you feel dumb, raising your interest rate, let me tell you how this could financially impact you. Use a story or testimonial of somebody else that might have raised their interest rate but had an overall massive savings in their household. And so it's not enough sometimes, I believe very much in niching and having one area or two areas of what you do be a funnel towards specific things. We often want to be everything to everybody. We want to have everybody know, and the brokers have this advantage over retail. They have a much bigger product line and a much more competitive interest rate, right? And so we know that. And saying I can do anything means nothing in translation marketing wise. When you get specific and say I serve veterans or I can do first-time home buyers, or I can do this type of product, or I do reverse mortgages. It's very specific. It's going to speak through the lens of your marketing to those people that are hearing you. People are scared. Loan originators are often scared and resistant to this type of niching in their marketing because they think it shortens the funnel. Well, I can do so much more than just veterans loans, or I can do so much more than these specific things. I'm not saying change all your marketing to one thing. I'm saying that amongst all the things you market to, you have to start marketing to this pain point right now. That is where you're going to find the well of these instant loans. That is where you're going to get immediate reciprocation off of your marketing. Operating from a business plan is a completely, different thing. I understand when we talk about business planning, it sounds so boring and so vanilla. As an executive leader, I've been making loan originators and sales managers write business plans for a very long time. I created something called the Blueprint for Success, which is a shell of a business plan. It's one page. It has 9 fillable spots. And I've applied it to over 3,000 originators over the last 15 years. And I want to say that it has been a tremendous game changer for those people that have taken it. And that is going to be part two. So if you're here today and you want to hear about the blueprint for success and the 9 components to a business plan, then please join us on the next call because that is where I'm going more in depth on that. What I will tell you is that there is a level of reverse engineering that everybody in our business needs to do. We have to have a target. We have to reverse engineer to the point where we understand what our daily activities need to be, what our historical conversion rates are on those activities. And we have to also be willing to change if we're not getting the ROI quick enough. We have to be efficient in our day. We have to stay in the prospecting zone 4 hours of an 8 hour day. So I always give a target of 50% of your time should be spent on money making tasks 4 days of the week. And that may seem like so little, 16 hours a week. Really? I work like a 50, 60 hour week. I guarantee you it is hard to do. It is even hard in our market right now to come up with 4 hours of prospecting things to do. And so if you start kind of time blocking to this, even if you break that 4 hours up to 2 hours in the morning, 2 hours in the afternoon, you are going to start to see a difference in how much marketing you do. And I implore you to think of many ways to market. Work on your CRMs. Your database, which is the next point, drip marketing, is one of the greatest targets you could have right now. We have not been great as an industry of adhering to our CRMs. A lot of us get a CRM that is put in place by our company owners, or we have it as part of our tech stack that we've personally purchased, but we haven't mastered it. We haven't slowed down that slingshot theory of slowing down and backing up to be able to, have it go forward faster because we understand that every single person that we speak to today, every single person, the person that we're denying today is a future lead for us. If there's a reason for the denial that can get cured over time, we should be keeping that in a nurture status and seeing that client through to the overcoming of what that denial objection is. That is a future client. Every person that is talking to us in some way that we're providing value for should be going into our CRM. I'll be the first to admit when I was an originator, I wasn't great at putting the names in. And back then it wasn't hard coded ahead of our POS system. So it was really a separate software that you had to get out and go into and maintain. I actually hired a loan officer assistant when my originations got to a certain level in the late 90s, 96, 97, 98, 99, to do nothing but take my hand scratched addresses and names and nurture statuses and put them into my CRM. And I was meticulous about mailing to my database. And back then, a lot of times we did a combination of email and also hard mailing of things through the mail. And so you've probably recently seen an uptick of this in your own home where you're picking up mail and there's mail coming in now, right? And so, what I'm going to tell you is one of the greatest targets that you could have in prospecting right now is the maintenance of your own database. By the way, your warm database, people that have used you before, have a 10% likely conversion opposed to a cold database, which might be 1 or 2%. And so you need to be someone that's really going to maintain this really well. If you haven't been doing it, no time like the present to dedicate some time blocking to updating your CRM and getting more messages out with this marketing about the pain that we spoke of in finding the well. And so if you are new to this business and you're sitting here saying, well, I don't have a database. So I don't, this is something that I don't have that everybody else has. I will tell you that's okay. You can collect acorns faster than probably a veteran that's maintaining a big database because all you're doing is picking up the new acorns every day. You have more time to build your CRM, and just fill it as fast as you can with all the people that you're creating business with each and every single day. So, keep those drips high and keep yourself in front of people because refinancing and buying is a timing thing. People are fickle. We all know this. That great customer, we can't believe they went somewhere else. We found out they closed somewhere else and we're in disbelief, because we sent them our annual Christmas card. Well, guess what? Somebody sent them something last week. That was the last thing they saw and they called them. And so your touch points need to be there. And I'll say this on social media as well. You should be posting 3 to 5 times a week. Your social media is your television station. 3 of those posts should be something that has nothing to do with your business, that tells the story about you, your personality, what you believe in, your hobbies, your family, your life. Because as a television station that we want people to tune into, that's where you're gaining trust and likability. And then 2 of the 5 should be business posts. And if you do that mixture, you're going to have a great audience. You should also be spending 15 minutes a day giving love on social media. That means not just looking at who's responding to your stuff, but going out there and adding comments and likes and loves and all of that, sharing your realtor's posts and their listings and showing them the love because that's a currency. And it changes the algorithms. And you should be trying to find 10 people to connect to and add to your friend and connection list every single day. Every time you add 10 people using the suggested algorithms of these social medias, don't overthink it. I always say your social media is like your party house. You can let everybody into your party and you get to choose who gets kicked out. So if somebody comes in and misbehaves, unless it's really obvious, you shouldn't be connecting with them and it looks like a robo person or something, let them in. If the algorithm suggests you should know this person because you have 50 mutual friends, they're probably in your business or field, let them in. And those 10 people that you're going to add every day are going to send notifications to all their friends that you have added. And all of a sudden, that's going to boomerang back to 50 requests. And so if you're trying to grow your audience, that's another key factor in doing that. The fourth point of hitting your target with prospecting is the input versus output theory. And that is just if you're not getting the business you want, then you need to be doing something different or more. And this is elusive sometimes. Sometimes we are thinking, the longer day is going to get us more in return. That's where frustration starts to build. We're banging our head against the same type of marketing and it's not getting a return. Really, we do one of 2 things wrong with our input versus output. And that is that we stay too long in a fishing hole that's dry. So maybe we're waiting for lower interest rates and we're just telling all of our database, hey, when the rates go down, I'll let you know. And you're sabotaging your own selling ability because you're making the consumer think that is the only time to do a refi. You're leading that charge with that type of marketing. And so if you instead would say, listen, I'm going to let you know when it's a good time to look at your overall financial package. And I'm going to tell you rates are better right now than they've been the last couple of years. They're still higher than they were maybe the last time you refied, but a really good time if your debt's gone up and your cash has gone down to get that free analysis from me. Please give me a call. No pressure. I would love to help you out. And so again, what are you doing a lot of that you've been doing for a fairly long amount of time that you haven't moved the needle on or you haven't pivoted to hit that target harder. You may be just inches away from really making a great connection. And you already have the work ethic if you're working hard. So it isn't about time or it isn't about your energy or desire, but it's about rather what you're doing. And so that can be a good analysis. The second thing is we don't do it long enough. The opposing thought. we have these like flash in the pan ideas and we start these projects and marketing schemes. I love getting people that come to me and say, my social media doesn't work. And it's interesting because I want to really draw you to something important with social media. Your job is to get a call to action. In other words, your job is to get people to message you or call you or email you, contact you ultimately. And so, even with my own marketing, I have 7 social media channels. We don't always have ads that go out that are tons of likes on them or even tons of comments. And I've had a lot of SEO people selling marketing reach out to me privately and say, hey, I can help you get more likes. And I always think, well, that's not what I'm after. I'm after, call to action. And our ads have a strong call to action at the bottom of everything we do. We put up what we're putting up for business, our 20% of our business posts. And then we say, call me today, contact me today, DM me today. And then we measure how much of that we get. And so interestingly, I've been able to show the SEO marketers that are telling me my social media is performing poorly that even though I didn't get 100 likes on this post, I got 300 views and 6 people messaged me, 4 turned into clients. And when you compare that to an SEO marketer that might be trying to buy you likes, popularity, and feel good things, but not get you the call to action, we lose sight of what we're trying to do from a business perspective. So I want to give that to you. I want you to measure in the right way your input versus your output. All right, final theory. I like to keep my lessons to in and around 30 minutes and then open it up to any chat questions or unmiking for that matter. So I'll stop sharing after I make my final point because I know it can get really boring if you're sitting here too long hearing somebody talk at you. I hope that you've picked up some nuggets already. The final point is called the looking glass theory. The looking glass theory is based on Charles Horton's sociology of 1905. And it challenges the thinking of asking people around you how your business looks, being on a team of people where you subject yourself to a 360-degree review and you say, am I looking like through my marketing? Am I, connecting with people on an emotional level? What does my business look like to you? And so it's about going outside yourself. A lot of times the answers for hitting the target for marketing are going to come from leaders that you have in your organization, from peers. I know we tend to not love the guy that always gets a trophy or the girl that always gets a trophy. We can't always relate to that number one person that's really exceptional because we think they must have some magic that we're not doing. But I implore you to sit with those people, like them or not, and ask them questions about what they're doing because there's probably some takeaway nuggets. I am a believer we do not all have to slay the dragon the same way. I don't think our marketing needs to look the same. I don't think our TV stations need to look the same. I'll give you mine, and I don't mind sharing this. And that is that I put up posts about dogs. I put up thought-provoking quotes. I release some of the content of my coaching through video clips. I'll share. I love plants. I have tons of plants in my home and floral things. And I have written a number of books that I also share quotes from and sentiments from and that sort of thing. And yes, in between all of that content, 20% of the time I'm telling people what I do and how I do it and how I help them. The last thing I want to say to you is raise your ask. ASK, raise your ask. You need to be asking for the business. If you've ever gone to that realtor office, there's a loan officer sitting in there at the closing table, and you're like, gee whiz, I've been bringing donuts here, and bagels for the last 6 months, and I'm empty-handed. Sometimes it comes down to us not, just believing we're going to get the business by being present. Sometimes we say, hey, I'm a mortgage loan officer on social media. If you need anything, let me know. And it has no translation to the human ear because people don't know what that means. But when we get specific and we put up a list of everything we do, which you should do often on social media, where you say, I do cash out refis, I do, veterans loans, I do this, just make your list of everything you do. And then at the end, ask for the referral. Having a referral mindset is such a huge thing. If you leave your house in the morning and you look at every interaction you have, stopping at the convenience store, the people that you buy your milk from every single day, the guy that fixes your car, your landscaper outside, the guy that come and does your pesticide around your house, your housekeeper, whatever it is, your kids, friends, parents, boards you serve on, your neighborhood, all the people that reside in the building that you work in, all the people that have businesses on the street you work on. If you start to look around you and realize that people are going to want to refer you if they know you business because you ask them to give you business, it will make an enormous, enormous difference. So I hope this has had a lot of good nuggets. Next time, I'm going to be talking about the blueprint for success and handing you the 9 components of building a business plan that actually converts. I hope you'll come join me for that. And I'll let Valerie kind of see if there's any questions in the chat, or if anybody wants to unmic, you're welcome to ask a question and I'll stay on a few more minutes.
Great. Awesome. I don't see any questions in the chat at the moment, but if anybody has any, please feel free to type those in there now. Or of course you can raise your hand and we can unmute you.
Yeah, we would love to have anybody ask questions. Who's the brave souls that are out there?
You've probably just blown their minds with
I
all
know
the
there's a
information.
lot of information that we just shared. I know, taking it all in. Well, I will say this. Can I drop my email on there? And if anyone had a
Yes.
private question, okay. So I'll give it to you so you can type it in because I think you have the access, which it's just
Yep.
Christine, my first name, and then it's at visionyoursuccess.net. If anyone has any personal questions about the material I covered or any question at all, by all means, just email. Happy to have a correspondence with you. And I'm excited to tell you, do we know what the next date in September is?
We do. It is
Okay.
September 2nd, same time, 1 p.m. Eastern time. And then the third date is October 7th, also at 1 p.m. Eastern time.
Awesome. And we'll be promoting it on our social channels, and I know you will be internally. And I'll also be going to speak at NAMB National in Vegas this fall. And I hope some of you are going to get tickets for that as well. But anyways, it was really nice spending the last half hour with you. If you're not a member of my Facebook group, it's 2020 Vision for Loan Officer Success. We welcome everybody of all calibers, all leaders, lots of great information over there, and lots of free shares. We share webinars there as well, sometimes that you can jump on and join with economic news every week. So our weekly 30-minute session on Tuesdays is open to the public, and we always drop a link to it. So by all means, come. So
We do
Valerie,
have
thank you.
somebody
Oh,
that raised their hand.
okay,
So,
great.
Elizabeth, you,
Sorry. Yeah.
here
Hi.
we go.
Can you hear me?
Yes.
Yes.
Oh,
Hi.
hi. Um, I guess just one simple question about social media marketing. I'm very much into animal rescue and stuff like that, or animals in general. So I'll share a post from someone else. Is that a time to be asking for business as well?
Sure. I always say bring your ask over to kind of the private place of Messenger. One of the greatest posts that I can give you for even building realtor relationships, because a lot of people are trying to deepen their realtor partners right now, and cold calling has proven to not be effective. They're over solicited right now, and they're just not picking up those calls. But one of the things you can do is put a post up, and it kind of goes along the line, Elizabeth, of what you're asking. And that is kind of like nurturing a warm connection. And you're talking about that right now. You're saying, I have this, this warm conversation that's going on. Is it appropriate to ask for business? It is when you move it over to like a private messenger and you start up a conversation with them there. The post that I suggest everybody put up to build a deeper realtor relationship is to say, put on your personal, typically not your business page, but on your personal Facebook, to say, if anyone had an excellent realtor who helped them buy or sell a home, would you drop their name in the comment section below? I'm building an elite realtor list for my client base, and I need to grow it. It's not saying I'm looking for business. It's not saying I'm going to ask for business. And what ends up happening is everybody wants to brag about their excellent realtor. And so they start dropping the names. They're usually connected to these people. So it tags the realtor. And then you just say thank you, thank you, thank you, and you love the comment. And then you can go over privately to Messenger and say, "Hi, Bob. Susie said you were an excellent realtor for her. What did you do? Did you help her buy or sell her home?" If it's not said, start the conversation and just ask them about their business. What geographical area do you cover? What products do you focus on? Or do you have a niche? Let me learn more about you. And then take their name and their email and their contact information, put it in your realtor CRM. This is how you're going to grow your realtor CRM, and make sure that you are coming up with content to put value added tips out to your realtor that's informative. Could be economic news, could be product news, could be industry news, it could be anything. And you're going to build a realtor list that way. And don't ask for business for a long time. It's a dating. It's not a marriage proposal out of the gates. That's another mistake we're making, is we're too quickly asking that realtor to marry us. The other thing is a lot of times we don't want to ask for business from realtors because we think they already got a guy. Well, that's 100% true for every realtor. So if we believe that to be a unsurmountable objection, we are never going to build realtor business. What we want to be is their number two. And so you kind of got to start from a place where you're like, if there's ever a fall down with the person you use, I'm happy to take a second look at it. I know we don't want to work on crap and scraps, but it is a opening door place to start. And then typically, if they can see how you interact, if your service is better, if you're responding quicker, if you're just kinder, funny, or more giving, showing up quicker, you can win that realtor over just by getting some of those tougher deals and getting interactive. I hope that helped.
Thank you.
Thank you.
You mentioned personal and business. Do you recommend people have two separate pages on Facebook, a personal page and a business page?
So I don't recommend typically that people build business pages. I more help people manage business pages. They come to me already built. And what I'm going to say to you is that the algorithms on the business pages are flatter than your personal one. And what that means is the social medias that have both business and personal pages, they flatten the algorithm on the business page because that is the only place that those social media companies are typically soliciting you to boost your post and get in front of a specific audience. And I'm not saying that won't happen or help, because they have the ability to do that for you for pay. I'm saying that if you put a post up on your business page, it's 9 times less likely to be seen by your audience than your personal page, or interacted with. And so I have a business page and we put 4 posts up a day. When I think there's something really important, and a great example is this class today. The post went up this morning for this class on NAMB, and it really had minimum views and no likes. And so I said, I'm going to throw this up on my personal page. Minute I did it, and it got visibility. So I will never say don't build a business page because I think sometimes that can create a vetting place for your client. Because sometimes if they're like, who are you with? You've got to have a place to send them that looks formidable. And you don't want to send them necessarily to your personal page because God knows what you've been tagged in and what you're on sometimes, touche.
Right.
But I think it's really important you have a place that they can look at you from a purely business perspective, and that serves a really important purpose. Yeah.
Yeah, I guess you could if you wanted to maybe link like your Google business page, something like that, on your personal page. I know sometimes it seems like when people have a personal page and a business page, of course they're always posting on their personal page or liking something or interacting with someone. And sometimes the business page sort of is over there off to the side and not getting regular postings. And, I know when I look to validate a business, I just did it last night. My air conditioner went out. I looked to see when was the last time this page posted because I don't know if it's actually still in business. And if it's not in business anymore, I'm not going to waste my time.
Right.
And so, that I guess is the other um, negative to having two separate pages unless you really are committed to posting or you do have one of those software systems that you can do all your postings in a month and it'll just auto post and all.
Yeah.
So
And I'm going to tell you something funny. I have 2 human beings that do all our posting manually. I learned because of the robo posting that it knows it's robo, and it also flattens the algorithm. And these two people every day put our posts up. So this is really funny. When you see a post go up at 8, 10, 2, and 6 for 2020, there are human beings posting those on all 7 channels. And we do that because we know that it knows that it's a human being that's posting them. And so it'll still pick up on keywords that knows it's a business post and flatten it over your personal post. So you got to get really, cute in your copyright of what you write a lot of times. The most viral post I've ever had occur was the night before I went back a year after I left the mortgage industry and kind of retired out to this. I wrote a very, vulnerable post about, I stepping back on the stage of my alma mater, my company, after being gone for a year, serving them for 12 years as one of their keynotes. It's kind of nerve-wracking going back there. And it's so funny because it was just off my heart. Um, and it got like 42,000 likes. It was like insanity for me. And I've never been able to do it since. So I would love to tell you what the breakdown of that is. And it had no picture with it, interestingly, no call to action either. But it connected. And what I do know about that is that, don't be afraid if you put a post up and it gets very little traction at first. You can repost the same post, and you should do this as a test for yourself later in the week at a different time. And it's just audience. It's just audience timing. It's whether it catches fire or not. If it catches fire fast, Facebook's going to open it up. Facebook is only showing that post to a percentage of your friends to start. And then if it's got traction, it opens it up wider to your friends group. And then if it's got really good traction, it blows it up on the timelines of suggested people that aren't your friends, and so on and so forth. And so, if something doesn't go well once, don't get stuck in your mindset that that was a bad post. Try that same post again throughout the month, 3 or 4 times. You're going to shock yourself at literally the timing of things, and just how, things connect at certain times and all that stuff. So,
Yeah, awesome. Great
yeah,
information. So really
awesome.
appreciate it. So we'll see everybody back here on September 2nd. If you have a friend or business colleague that you think would also benefit from this, please share the registration link with them so they can join us. But thank you so much, Christine. Greatly appreciate it. Thanks for taking the time out of your day to do this. And we will see everybody next month.
Awesome. I'm so happy to be here.
Thank
Bye
you.
bye, everyone.
Bye-bye.